Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up. And this is for Monday, the 4th of June, 2018. We're just getting on to 3:15 p.m. Central Daylight Time. So you're about where the markets are going to freeze and settle for this next 15 minutes. Then they reopen, go to 4 o'clock. But these will be just about where the settlement prices come in on all of the different stock indices. It was an interesting day in that you had a little bit of a correction in the dollar, getting a bit of a correction in the euro. The pound tried to correct, and it just couldn't keep itself up at all. And more premium continues to come out of the Japanese yen. Now, over the weekend, we saw that there still looks as though the North Korean summit is going forward. They've given a time frame, 9 a.m. in the morning. I think it's Singapore time that they're going to meet. That's Kim Jong-un and the president. We also saw that our trade delegation, Wilbur Ross, finished off his trip to China, and I think he came back empty-handed. Nobody's talking. Now, just a guess. Do I know? I don't know. But I saw what the Chinese press released, and if you read what they released, it was pretty clear. They've drawn a line in the sand. If the U.S. puts more tariffs on them, like the president has threatened for June 15th, they're going to rescind what the good they've done and whatever they're doing. They will not, from the sounds of things, commit to helping us give a number, a target number as to what the trade deficit will drop down to. They're not going to commit that they have to buy X amount of goods to do so much of this and that. Sounds to me like they're giving us a lot of lip talk. Don't know where the president's going to go with it. If I'm him, I probably want to get that June 12th summit done with Kim Jong-un, at least the first meeting. You're not expecting anything to come of it other than they meet, but it doesn't sound great. Then this week, we have the G7 summit, and that's taking place in Canada. Can you imagine what that's going to be, the buzzsaw? Because the president's going in there as the enemy. Not as the person holding things together, but the destructor. He's broken all the tariff deals. He's not going to allow the other parts that were there. He's just going to keep raising the tariffs. They're going to have their moments with him. So it's going to be an interesting week. And then next week, we have the FOMC meeting, which is pretty much a said, done deal that they're going to raise interest rates by 1/4 point. And the stock market strength doesn't take the Fed off that. But I would imagine that we have to pay close attention next week to the press conference, and I would be there asking, what about these tariff wars? What's it mean for the U.S. economy? Where do you see it going? I did read one report before I came on with you here that was written probably 6 months ago that said if the U.S. and Mexico did not agree on a NAFTA deal, could hurt their economy within a year to 2 years by as much as 3–4% of their GDP. We'll see. It's got to hurt ours too. We realize that. But when you look at the chart action, you've gone from this 25.97 level, climbed your way all the way back up about 150 points, if you will, back up to where you're at now. And you could even afford to settle back to that 18-week average that comes in at 26.93 1/4. When we take a look at the daily action, I want to take today off because this is an attempt, a mini attempt at a breakout. I don't think it had any volume to speak at today. We'll see if you get a Tuesday reversal back into all this. But on this chart, if I add the swing lines to it, I get the pattern of higher lows, higher highs over this resistance. That's bullish. When I look at what the market did, you've made a new high, and this is important too. You had a bullish crossover on Friday where the 18-day average, take a look, actually it happened on Thursday, got over the 100-day average. Now, to make that valid, you've got to get through these highs. You've got to make a new high for that part of the move. You did that today. So the crossover is bullish, and you've got support at those two numbers. When you look at where the market might go, I'm going to tell you it went as far as it has to go. You're now up against the upper Bollinger Band at 27.4750. You got to 27.49 and you stepped back from there. There's no magic to it. You can push the Bollinger Band out. The odds are you're probably not going to. Why? Because you're already overbought. You were embedded, and if you're embedded, I'm impressed. But the last time we went embedded, and that's when the red and blue lines go sideways over 80, you went nowhere. And I'm wondering, is the market now possibly ahead of itself? In summation, trend up, bias up, momentum, overbought, and you've hit an upside target. That's where I'd have to leave it. In the NASDAQ, are you going to change from overbought to embedding? Now, the definition of embedding in the slow stochastic study is this. It's made up of two numbers, the slow stochastic. George Lane called them a K and a D number. I don't know why. I don't even know what the word stochastic means, and he used to laugh at me when I'd ask him, and he gave me crazy answers. He's not here to talk to anymore, but I was a friend of his. The market's got higher. If you look at it, you've got both numbers over 80. Both numbers were over 80 on Friday, not so on Thursday. It takes 3 days in a row for them to embed. They typically don't embed. Markets typically get overbought or oversold. So is the market ahead of itself? Yes. Does that mean it can't go higher? No. It can change its character and take off. And other than it's just got overbought, it's still in an uptrend. What are the odds of staying over the upper Bollinger Band? 5% of the time. So when you start putting consecutive days together, you were over it today, and on Friday you closed over it as well, right? So that's 3% chance tomorrow, my rule of thumb. I count each one of those days against the 5% number. I give each one a full percentage point. I'm looking for the market to pull back. That doesn't mean it's going to change its upside momentum. It means it's going to pull back is the percentage play. That doesn't mean it'll happen. When you go to the Dow Jones, you've got higher lows, higher highs. Unlike the NASDAQ, momentum up, nowhere near overbought. Ran into the buzzsaw again of the green line, the 100-day average. It stopped the market now for the past, if you will, about a week and a half on each attempt. If it can pop through it, the next resistance level is 25.05 and supports back at 24.713. The problem, it doesn't look like it, is 24.342, if you put a stop under the most recent low, is almost, what, $900 away? That's a lot. In the Russell, you went up to the upper Bollinger Band and you got tired. You ran out of your momentum. You are overbought in an uptrend. So we have a pretty common theme here. We're overbought and could embed in some of the indices, and most have hit upside targets. Okay. In the VIX, last week I had brought up the idea to you, and I'm sure you'll recall. I said, you know, I think that the pros are selling on the rallies of into the upper Bollinger Band, selling calls, trying to buy them back if you get to the 18-day average of closes. You tell me what has happened there. You know, I can't prove that, but I think they're selling puts when you're dropping down to it, and I think they're selling calls, and I think they're accepting the fact that the volatility's come out of the market again. You can see how wide it was just back here. We know the mini flash that we had all the way up into the 53 level. That went away, and we're again getting into very narrow bands. Today, watching the market trade was the equivalent of watching paint on a wall. In the T-bond market, we have a June 12th and 13th Fed meeting. I would assume the market, after this rally that it had off the Italian and Spanish situations that have all calmed down, that the market's gradually working its way back down. It didn't hold very well at the 100-day average. It held it on Friday, gave ground today. Next support is the 18-day average, and you can see momentum is down. In addition, you're not trending. You have a pattern of a lower low and a higher high. When I come to and that was, by the way, the SEP bonds. The 10-year notes have a lower low and a higher high. It's the same pattern. On Friday, you did not hold the 100-day average. You slipped even further today. It's a candidate to see if it can get to the 18-day average as well. In TLT, you have a different look. you've suddenly got the swing line bearish. Lower highs, lower lows, pointing down to the 18-day average is the next support level. See if it can get there. In the dollar index, you made a run. You know, you had lost the embedded reading back here, and when that happens, you often try to get down to the 18-day average. Was that enough? I wish I could answer it for you. Are you trending? No. You've got the swing line down, which is bearish, but you're over the 18-day average. The two nullify each other, and momentum is pointing down, and you have a flip-flop of all this in the euro. Now you have the euro currency with higher lows and higher highs. Objective, the 18-day average of closes, but the bias is down since you're under that 18-day average. Momentum is up. In other words, these charts are in a correction mode. You've lost the embedded reading also in the British pound. I thought it would do better today and try to get to that 18-day average. It seemed to have sold off, but typically when this happens, it means price and the 18-day average want to come together. Doesn't matter to me because the swing line's up, the bias is down, and no matter if you're thinking of shorting, you're too oversold to do so if you put all of them into the, what do I say, the filter blender and say, does everything come together? In the Japanese yen, you broke just enough to take out this low. So now you have a higher high and a lower low. No trend. Momentum pointing down, bias down since you're under the 18-day average. So it's a market that went flat. The safe haven buying that occurred during the Italian situation, during the Spanish situation of a week ago, out of the market, I think, for the time being. In Bitcoin, you have quietly lost the embedded reading. Notice how these numbers right here are over 20. They were both under 20 there, day before. So when you lose it, the only time you can get the embedded reading back, and it's very important to get it back, is the very next day after it's lost. Prices would have to drop hard to do that. They could. The swing line is up, and if it stays lost, then I'm looking for price and the 18-day average to come together. What I was amazed with over the weekend is in reading about the cryptocurrencies on how many people think the 6,900 level is a bottom. Generally, when you get the herd one way, I got to be a little careful. This is August Brent versus WTI crude. If I move to the August to just give us a bit more time on them, and they went from a low of $4.69 recently, right up here to the $11 mark, and it's down now to $10.45. But as you can see, the market has put massive premium into Brent in a comparative level to WTI because of Venezuela and because of Iran. Admittedly, all of the energies have been sinking down in price. If you start taking a look, this is the July Brent. No, it's not. That's gasoline. So I got that chart wrong. Sorry. Crude oil. Let's go right there. Lower highs, lower lows into the 100-day average. There's plenty of U.S. crude. We added more rigs again. We've got plenty of production. And I think I have been an advocate warning everybody that the problem in the United States is pipelines and ways to get the oil onto the ships for export. Our ports aren't built for these monster mega tankers, and the pipeline capacity needs to be dramatically expanded. It's not. And what's happening is in certain areas, you're getting a glut of this oil that can sell at times for anywhere from $5 to $12 cheaper than we are right here if you can't move it. Then you got to hire trucks, you got to figure out ways, be it rail, whatever it is, to move it. It's expensive that way. Here's the gasoline. I had the wrong chart there. I am sorry. Lower highs, lower lows, right into the Bollinger Band. I think the smart money is pulling money off the table on the short side, and now they'll get ready for the summer driving season where the prices maybe start bottoming out here, getting ready to rally again. In the nat gas market at this time of year is always looking for heat. You want to see those air conditioners turned on. We're not quite getting that. In the Midwest, and our weather moves, if you will, eastward and north, what's happened to us is we've gotten very mild, if anything. So you're seeing that in the market right now, but there's an upside bias. It's over the 18-day average of closes. The trend has got higher lows, but now lower highs, so that's not a pretty picture. Support's back at 289, and momentum is trying to turn down. Keep in the back of your mind, I'm going to write my gold report, maybe even a silver report this week. If you'd like to get them, the way you get them now, you got to go to our website and re-sign. I don't want to just keep sending it out to old lists. So if you want the reports, go to our website, www.iraepstein.com. You'll see a carousel of free offers. The metal reports will be one of them. Click up here if you'd also like to get it. If you're watching me on YouTube, it'll take you right there. I'm Ira Epstein. Let's see, are these markets about back to getting open again? I don't know. Well, here we go. Yeah. So this is where the markets are coming back in. We're just about a minute or so away from them reopening, and that gives you where we're at. Take care.